Hello and welcome to the paid weekly recap for the week ending December 19th, 2025. I'm Keith Harwood, CIO of Yellow Tunnel, and also pictured as Vlad Karpel, the CEO and founder of Yellow Tunnel and the creator of the artificial intelligence behind the predictive AI for dynamic market system. Normal disclosures before we get started. Options involve substantial risk and are not suitable for all investors. Yellow Tunnel and myself are not investment advisors and not registered with the SEC nor FINRA. The information in this presentation is for education and information purposes only and should not be considered trading advice. And finally, myself and or the team at Yellow Tunnel may have a financial interest in the securities presented in the trade ideas. I do urge you to read the characteristics and risks of standardized options available at the link highlighted. And if you need more time with the disclosures, please go ahead and pause the video here. Otherwise, we'll go into the recap for the week. So the 10-year yield has been bouncing around and continues to stay within the range between 4% and 4.2. Ending last week, we were testing 4.2, and through this week, we drifted back down to 4.1, ultimately settling at 4.15. 10-year yield is basically going nowhere fast. We did have some data this week that moved the markets a little bit. So the S&P 500 initially started the week on the weak side. Non-farm payrolls that came in low didn't necessarily give the market the bump up that was expected. CPI coming in low helped a bit. So overall, the market ended up on the highs on Friday as we go into the Christmas week, a holiday shortened week that often allows for the market to drift a bit higher. In terms of tech, we had the test of lows followed by a bounce back. Ultimately, the test of the 100-day moving average was a bit scary, but we pushed back above the 50-day moving average by the close on Friday. All in all, it looks like this market just wants to drift higher from here. Small caps peaked out in the prior week, pulled back into the middle of the week as well, started to bounce back, not quite as strong on Friday, but did hold above the 50-day moving average throughout. So overall, we are seeing a general bullish tone, a little bit less bullish than a week and a half ago, of course, but overall a light bullish tone in small caps, a recovery market tone in tech, and the S&P 500 continuing to consolidate. The question becomes, can we make that big press, 3%, into the last 2 weeks of the year in order to hit 700 before 2026? Ultimately, that seems like a long shot at this point, but stranger things have happened as things slow down. Now, along with that slowdown, we are seeing the VIX fall. We're at the weekly lows, closing just below 15% on Friday, near the lows from the prior week. 15% has been a bit of a floor. We are drifting below it. No surprise as we go into the holidays. I wouldn't be surprised to see it down as close as 14% potentially as well, if the market starts off on a bullish note, as we tend to see light volume, light trading during the holidays here as the last 2 weeks of the year kind of come to a close. Risk doesn't always get allocated very aggressively in these following 2 weeks. So while we may see some new ideas, thematic ideas for 2026, those usually happen in the final few days or the early part of 2026. Some are still willing to try to get those going now, trying to beat the rush for those new ideas. But overall, I wouldn't expect anything too crazy this week, but stranger things have happened. Now, with regards to paid, we had one trade this week. Waded through non-farm payrolls from Tuesday morning. Didn't see a great opportunity throughout the day on Tuesday. Evaluated a little bit further. We decided that with NEM continuing to stay stable on Wednesday, that it was time to go ahead and look at the put credit spread there. Now, 97 has been a pretty solid floor here. 95, ultimately a better floor. Splitting the difference, we sold the 96.95 put credit spread when the price of NEM was drifting below 99. The open was 99.30. As it started falling below 99, it allowed for a good credit for the 96.95 put credit spread expiring on Friday. 20 cents, max risk of 80. Exiting at a penny on Friday. Net profit of 19 cents on an 80-cent risk is about 24% in the 2 days. So about 12 times more than the stock return. All in all, a good trade, another winning trade for the put credit spread theory, helping prove to us that much further that this put credit spread process that we've moved towards after some pretty intense back testing and reevaluation of the paid system, and considering the market conditions for this year where we're not seeing quite the same acceleration on a lot of the momentum stocks. This has been working, continues to work. We'll continue to evaluate it in case it stops working. But overall, been a very good system, good transition, and we're very happy with the results. On top of that, we've continued to have strong performance in the ideas in the live trading room, so please be sure to join us there. This week we'll have the morning bell only due to the holidays, so you can listen to me, talk to me, throw me some questions and ideas. Any of the 4 trading days this week, Monday, Tuesday, Wednesday, Friday, and I can address any questions or thoughts that you may have in the morning. Remember, it's from 9:15 till about 10:15 Eastern every morning. And then the following week, we'll return to a normal schedule with both the morning and the closing bell, and the closing bell goes from 3 to 4 Eastern. All right, thanks again, everybody. If you do have questions, you can always reach out to us. I'm Keith at yellowtunnel.com, and Vlad is Vlad at yellowtunnel.com. Thanks again, everyone. I'm looking forward to potentially an interesting holiday week and potentially something more boring, but sure to be looking for some new paid trade ideas Monday or Tuesday if they line up. Thanks again.